Okay, let's unpack this. We are diving deep into the Q3 2025 earnings call for Insmed. And if you weren't watching the market reaction, well, you missed an absolute pivot point.
Oh, absolutely. Big move.
Yeah, this wasn't just, a report on the last 3 months. This call fundamentally repositioned the company in investors' minds. It's like Insmed pivoted from maybe a risky single-asset platform to a dynamic multi-brand commercial operation. The core message felt like cash is being spent and, well, it seems to be working.
And that aggressive repositioning, backed up by really outstanding top-line results, that's exactly what drove that massive stock reaction.
So our mission here in this deep dive.
Yeah, let's try to isolate the core financials, really dissect those pivotal BRINSUPRI launch metrics, and critically map out that exceptionally dense clinical catalyst calendar. Management just laid out a lot for the next, 18 months.
It's packed. You really need to understand what this quarter's success actually buys them in terms of future clinical shots on goal.
Exactly. Yeah. Optionality.
Absolutely. So, okay, let's start with that central paradox, the thing that drove the stock surge. Because if you only looked at costs and the bottom line, you might kind of panic.
Right.
But the top line, that told a completely different, very bullish story that the market clearly latched onto.
It was a classic case of growth at all costs getting validated. So Insmed reported revenue of $142.3 million.
And just for context?
Well, to put that in perspective, that was a staggering beat. Consensus was around, $114.9 million. So they beat by about $27 million. Right. And that's 52% year-over-year growth. I mean, that tells you the commercial engine is running hot.
That is just undeniable top-line momentum.
Yeah.
And, biotech momentum like that is currency. But, okay, we do have to address the other side of the ledger. They reported some serious losses.
They did, yeah. The GAAP EPS showed a loss of $1.75. That missed the consensus estimate of $1.34, so a miss of about 0.41.
Okay.
And the company posted a net loss of $370 million for the quarter. And if you look at the operational spending...
Yeah, the cost of running the show and fueling growth.
Right. R&D was $186.4 million, and SG&A sales, general, and admin was identical, $186.4 million. You add that up, it's a huge cost base. Over $500 million annualized, roughly.
So why didn't investors freak out about the heavy spending and that big net loss? I mean, this is where the whole investment idea holds up or falls apart, right?
Well, the market effectively signaled that they're actually kind of thrilled with the burn rate because the revenue beat validated the reason for the spending.
Oh, okay. So the spending is seen as investment.
Exactly. That $370 million net loss. It's largely because they're aggressively investing in launching BRINSUPRI and funding that deep clinical pipeline we mentioned. Investors seem to view this money not as leakage, but as fuel for future growth.
Makes sense.
And the revenue momentum just confirms the commercial strategy is working, so the market could look right past those near-term negative earnings.
Okay, so here's where it gets really interesting, I think. The launch of BRINSUPRI. That's their new brand for non-cystic fibrosis bronchiectasis, NCFB. They only had, about 6 weeks of sales in the quarter?
Yeah, just a partial quarter.
Yeah.
But the performance was explosive.
What are the numbers?
BRINSUPRI generated $28.1 million in that short window. But what's maybe even more important than the dollar figure is the breadth of that initial uptake.
Okay.
They saw roughly 2,550 new patients start treatment, and approximately 1,700 physicians wrote at least one script.
Wow, 1,700 prescribers in just 6 weeks. That suggests they're hitting a really broad base, right? Not just, a few specialists at big academic centers, but getting into community pulmonology practices too.
Exactly right. It shows that initial push, the education and commercial strategy, it seems to be resonating across their whole target audience.
Right.
But, and this is important if you're trying to model this out.
The caveat.
Yes, the crucial caveat management provided. It gives context for Q4 estimates.
This is the inventory stocking, right? It's a critical detail.
It is. Management was very clear. Approximately 40% of that $28.1 million in BRINSUPRI revenue came from necessary channel inventory stocking.
Right, the initial fill into the specialty pharmacies.
Precisely. And they made it clear this stocking effect is not expected to repeat significantly in Q4. So while Q3 was a massive win, the sequential growth of Q4 will have to rely purely on underlying patient demand. It makes Q4 a really critical quarter to watch for that organic pull-through.
Right. Still, despite that inventory nuance, the CEO's confidence on the call, It felt, I don't know, stratospheric. They explicitly compared the launch potential to historical respiratory blockbusters. Mentioned Dupixent, Pinra.
That's a massive statement.
It's huge.
It really is. When you start throwing around names like Dupixent, you're not just saying we have a good drug.
Yeah.
You're setting a benchmark for sustained, exponential growth.
Yeah.
And that confidence led to a pretty ambitious benchmark they put out there. Management expects the combined Q4 2025 and Q1 2026 sales for BRINSUPRI to reach the high double-digit millions.
High double-digit millions for the next 2 quarters combined.
Okay. And their main leverage point to get there is market access, isn't it? Since BRINSUPRI is the only approved therapy for NCFB, they're pushing hard for what they keep calling frictionless access.
Exactly. They're leveraging that exclusivity. The focus is making sure prior authorization criteria stick really closely to the patients who match the Phase 3 entry criteria.
Which was?
Patients with 2 or more exacerbations in the last 12 months. The goal is just to minimize any payer roadblocks and really maximize how quickly patients can get on therapy.
Okay. That brings us to the legacy product, ARIKAYCE. This provides the financial scaffolding for this whole aggressive expansion. Did BRINSUPRI's launch distract from ARIKAYCE at all?
It seems not at all. Actually, ARIKAYCE showed remarkable durability. It posted its largest revenue quarter ever at $114.3 million.
Biggest ever, wow.
Yep. That's a strong 22% year-over-year increase. And what often gets overlooked is the international business is really accelerating. Japan and Europe saw growth over 50% year-over-year.
Huh. So that resilience just confirms the commercial teams are executing really well on both fronts at the same time.
And the immediate financial consequence of that strong performance was management raising the goalposts for the full year, right?
They did. Directly because of ARIKAYCE's momentum, they raised the full year 2025 global net revenue guidance for ARIKAYCE. It's now $420 to $430 million. Up from the prior range of $405 to $425 million. So it just confirms ARIKAYCE is a healthy, growing cash engine that can support this whole multi-catalyst strategy.
Okay, and speaking of support, we talked about the massive spending, but we should probably reassure our listeners about the runway.
Yeah.
How long can they actually afford to burn cash at this rate while launching a new product and funding, half a dozen clinical trials?
That's the key question, right? The execution risk. But based on the balance sheet, that risk seems pretty low right now. The company ended Q3 with a very strong liquidity position, about $1.7 billion in cash equivalents, and marketable securities.
$1.7 billion, okay? Right. That amount of cash is basically the insurance policy, letting management pursue this pipeline aggressively without needing to dilute shareholders anytime soon.
That's exactly right. When you look at the catalyst map, and we'll get into how dense it is, they're planning to initiate up to 6 new Phase 3 programs in just the next 12 months.
Phase 3 starts. That's huge.
It is, and that requires significant capital. So that $1.7 billion provides a really substantial multi-year runway to fund both the commercial ramp and all those high-profile late-stage trials. The cash basically confirms their ability to sustain this multi-catalyst approach.
Okay, so what does this all mean for you, the listener? If the top-line success and the financial runway are now maybe largely priced in after the earnings pop,
right,
then the future valuation really rests entirely on that catalyst map. And this thing isn't just dense, it's almost overwhelming.
It really is a marathon of binary catalysts coming up. Let's start with a program that might be less understood. TPIP stands for treprostinil palmitil inhalation powder. It's essentially a dry powder inhaler version of treprostinil, designed to treat various pulmonary diseases, including pulmonary hypertension associated with interstitial lung disease or PH-ILD.
And they're moving aggressively on TPIP, I take it.
Very aggressively. They're starting the first Phase 3 study, it's called PALM-ILD for PH-ILD, in the 4th quarter of 2025. So basically now.
Okay.
And then further Phase 3 trials in other conditions like PH, progressive pulmonary fibrosis, PPF, and idiopathic pulmonary fibrosis, IPF, are planned for 2026. And here's where the FDA alignment is really crucial. They got agreement to proceed with just a single Phase 3 trial to support a submission for pulmonary hypertension.
Just one trial needed for PH. That definitely speeds things up and cuts costs.
Significantly.
Yeah, and ARIKAYCE, the current engine of the business, it's not just coasting either, right?
Right.
Its true blockbuster potential really hinges on expanding its label.
That hinge is the ENCORE Phase 3 readout. We expect that in the first half of 2026.
Okay, first half 26, and ENCORE is 4.
This trial is aiming to expand the MSC lung disease label. That's Mycobacterium avium complex. Right now, the addressable market is roughly 15,000 patients in the U.S.
Okay, relatively niche.
Right. but a successful ENCORE trial could potentially expand that patient population to over 100,000 U.S. patients.
Whoa, going from 15,000 to over 100,000. I mean, that really is the difference between a successful niche product and a genuine blockbuster drug.
Absolutely. Success there would secure ARIKAYCE's future as a multi-hundred million, maybe even billion-dollar asset, potentially.
Okay. Now let's talk about the nearest term binary events for BRINSUPRI, but outside of the NCFB label it just launched in. The market loves these kinds of rapid-fire, high-impact readouts. There are 2 major data cards coming up pretty soon, starting with Birch.
Right, the Birch trial. This one targets chronic rhinosinusitis without nasal polyps, CRSSNP. Top-line results are expected pretty soon by early January 2026.
Early Jan 26, okay.
And the sheer opportunity here is just staggering. Management specifically noted the study is 80% powered to show a significant 0.97 placebo-adjusted treatment effect. They actually called that a home run scenario.
A home run? Why strong language? What's the market size look like there?
Because there are nearly 30 million patients diagnosed with CRSSNP in the U.S. alone.
30 million.
Yeah, it's this enormous, underserved market, vastly larger than NCFD. So a positive signal here, especially a home run, would open up a completely new, potentially massive revenue stream for brensocatib. It would absolutely justify that narrative shift towards a pipeline-driven, multi-indication product.
Okay, huge potential there. And the second major non-NCFB data point coming up is Cedar.
Cedar, yes. That's the trial in hidradenitis suppurativa, or HS. Top-line results for that are expected in the first half of 2026 as well.
First half 26 again. Busy time.
Very busy. And enrollment for Cedar was actually ahead of projections. They got 214 participants, which was seen as a big positive signal. So much so that the company decided to forego the planned interim futility analysis.
Well, interesting. Skipping futility usually means they're seeing something encouraging. Yeah. What's the success bar look like?
They defined it as an approximately 20% placebo-adjusted reduction in the abscess and nodule count, the A count.
Okay. So if we kind of connect all these threads, it really does confirm that strategic thesis you mentioned right at the beginning. Management is basically telling us they plan to launch or start up to 6 new phase 3 programs.
Right.
Which means, what, almost a dozen clinical trials?
Yeah.
In just the next 12 months alone?
That incredible density of clinical activity validates the whole multi-catalyst company narrative. Success in just 1 or 2 of these programs could justify a dramatic, multi-billion-dollar re-rating of the whole business. The next year is purely about execution against this extremely heavy calendar.
All right. This is not financial advice segment, obviously.
Surely not.
Yeah. But given the sheer number of catalysts coming up and the company's demonstrated financial strengths now, you kind of have to look for the highest leverage, maybe still unpriced binary event. Which one offers the best risk reward for an aggressive, speculative bet right now?
Yeah, I agree that the BRINSUPRI launch success and the ARIKAYCE durability are probably largely factored into the current valuation, especially after that Q3 move. So the next truly transformative binary event, just based on potential market size and how soon it's coming, it really has to be the Birch readout in early January 2026.
Okay, Birch. So let's explore the high conviction, definitely high risk trade idea centered on Birch.
Okay. So the trade really hinges on a home run outcome for brensocatib in CRSSNP. Now, because Birch is technically a phase 2 trial, the risk is absolutely binary. It either works really well or it fails dramatically.
High stakes.
Very. But the potential reward, given that 30 million patient population we talked about, is exponential. It far exceeds what the market is likely pricing in right now, based just on their NCFB success. So the aggressive approach here would be some kind of leveraged call position.
Okay. And just for listeners maybe less familiar with options, why long-dated out-of-the-money calls specifically for this kind of bet?
Right. So you'd use long-dated calls, maybe options that expire in, say, February or March 2026, because that time frame captures the early January data readout and gives the stock some time to react and establish a new trading range afterwards.
Got it. And the out-of-the-money part.
You buy them out of the money, meaning the strike price is higher than the current stock price because those options are cheaper. They offer the maximum leverage for a binary event like this if the Birch data comes back showing that really strong, say, 0.97 effect. The value explosion from potentially opening up a 30 million patient market could likely send the stock price soaring far above that strike price.
Yeah.
That creates massive percentage returns on a relatively small initial investment. It's pure high-stakes optionality play.
Okay. So wrapping up, the Q3 narrative seems crystal clear. This is a company effectively spending, what, $186 million on R&D and another $186 million on SG&A.
Good number.
to accelerate both their commercial platforms and their future clinical assets. And that strategy was, well, unequivocally validated by that massive revenue beat and the raised ARIKAYCE guidance, even with the reported net loss.
The narrative is pretty simple, yeah. High spending, high performance so far, and very high future reward potential.
So here's the provocative thought for you, the listener, to consider. Given this incredibly heavy pipeline of Phase 3 starts and data readouts, just in the first half of 2026, you've got ENCORE, Cedar, Birch, the TPIP starts. Which single pipeline event, if it's successful, do you think offers the greatest unpriced optionality to the stock from right here, right now?
Yeah, thinking about that choice really forces you to decide which potential patient population the market is currently valuing the least. It's kind of a fundamental test of how you weigh current commercial certainty versus that exponential pipeline risk. Choose wisely.
Do your own diligence, of course. And thanks for joining us for this deep dive into the Insmed Q3 2025 earnings call. We look forward to hearing your thoughts on that catalyst choice.